Okay. That one. I'm not exactly sure which of these make it work. If I touch all of them, it works. If I don't, it seems not to, so good enough. Come on. Did something wrong. Okay, anyway, let's do some journal entries, huh? By the way, are you guys doing balance sheet and income statement? Remember, I don't care about cash flow statement yet. Don't worry about the cash flow statement. We're having to have a chapter on that at the end, right? One of the last chapters. Okay, and it's going to be hard, but we're going to do it all at once. So you can actually see it, right? Instead of doing pieces of it. I think it's a better approach. There's nothing wrong with the author talking about cash flows as they go through. Read it, right? I'm not going to test your quiz show. Everybody's got that one, right? So you won't spin your wheels doing that. Doing balance sheets and income statements, because I can certainly put that on a quiz and a test, right? But they're kind of obvious. What are you doing? Copying the balance in the general ledger. Where do the balances in the general ledger come from? Balances in all the accounts in the general ledger. Where do they come from? You make journal entries, right? When you started the company, what was the balance in every single account? Asset, liability, equity, revenue, expense. What was the balance? Zero. What'd you do? You debit and credit a whole bunch of times. And guess what? They grow. That's it, right? Okay, you do a balance sheet. What are you doing? You're just copying the balances in all the general ledger accounts that are what? Assets, liabilities, and equity, right? You've been doing this, I hope, in the homework, right? Okay, on the income statement, what do? Copy the revenues and expenses. And also later we'll have gains and losses. Big deal. You take the difference between the revenues, which are credits, the expenses, which are debits, and that's your net income. The revenues are more than the expenses. Or it's your net loss, right? It's the other way around. The expenses are more than your revenues. And then you take that net income, and of course you add it to the retained earnings for your balance sheet, don't you? But that's it. You make sure your balance sheet balances. The debits equal the credit, of course. Because the assets are all what, guys? Debits, credits. Debits. Okay? That's the constant ones. They're opposite. We'll get to that real soon. Okay? Up to today. Okay? So we add up all those debits. What are the liabilities and equity? Except for the constant ones. They're all credits. So we add those up. So we're making sure the debits equal the credits. Big deal, right? On the income statement, it's a difference between debits and credits. Okay, so the big thing is being able to do the journal entries. And I don't mean being able to do a journal entry. Writing something on the left and something on the right is not all that complex. Knowing what to put on the right side, or the left side, I guess, debits, and the right side, the credits, that's hard. In order to be able to do that, you have to know what happened. If you don't know what happened, you cannot account for it. If you do know what happened, it's easy to account for it. How many accounts are there? 5. What are they on the balance sheet? On the income statement. What does debit mean? What does credit mean? So these must be what? Increased with a debit, reduced with a credit. These must be what? Increased with a credit, reduced with a debit. Everybody good? Okay, we're just using the same stuff. These are a subset of equity, so as I increase them, I'm increasing equity, right? Earn revenue if you have more wealth, come on. Right? So what do? We increase them with a what? Credit. Put too much in, how would you fix it? Debit it. Expenses have to be the opposite, and also they reduce your equity. So you're reducing the equity with debits, aren't you? So as we increase these, we're reducing equity, huh? Reducing your wealth. So these are debits, aren't they? Net income, debit, or credit? Credit. Obviously, the revenues are more than the expenses would be a credit. Net loss? Debit. You've done this, right? Expenses are more than revenues. That's the model. That's it. All we do from here on out is use it. But you have to understand the business transaction. If you understand what's going on in business, you get to be a manager. If you don't, you don't. Kind of funny, huh? That way, right? Of course, if you know what you're doing, you get to do it. If you don't know what you're doing, you don't. Okay? So this is really nice. You guys are going to understand what's going on. Okay? So how many did problem 4-2? One person? Wow. I'm going to bore you to tears. Now I guess you can answer all the questions. Now you don't have to. You already did it. Let's use 4-2. One person. That's too bad. Oh, well. Oh, that wasn't due yet, was it? Yeah. Oh, was it today?
No, it's Friday.
It's Friday. So you're way ahead? Yeah. Obnoxious people like that. Probably a nerd. Of course he is. You know what a nerd is, right? It's the people you work for. It's a bunch of nerds. Now they know more than you, work harder than you, smarter than you maybe, right? But they're ugly and they're nervous. Us fool people, yeah, we're fools. You know, those of us that do absolutely nothing, and we don't have to do, yeah, we're fool people. Yeah, whatever. All right, anyway, what Bill Gates says anyway.
Zimmerman's Company, annual accounting year ends December 31st. It is December 31st, 2014, and all of the 2014 entries are set.
I'm on page 206. I hope everybody has their book. I can't imagine going to a business meeting without this book. A book is part of the business meeting. If you don't have yours, maybe there's a nice person sitting next to you who can share with you. You know, if you're a marketing type, you don't need a book. Just smile and they'll buy from you. What the heck? Yeah, that's how it works. Sure. Okay. Anyway. Right. That's the plan. Greetings. Welcome. You must have walked. No? No.
Okay, anyway. On September 1st, they collected 6 months rent of 8,400 on storage space. At that date, well, they told you what they did. I want to do it 2 different ways. We'll do this, okay? At the end, they're going to ask for adjusting journal entry. So first we have to record it, and then we're going to do an adjusting entry. So let's record it now. As, what's the date? September 1st. Keep track of the date, of course. Well, say of course, but you do need to, okay? All right, so what do we want to do? Let's write the journal entry. What would they have done at September 1st, 14? And remember, their year is December 31st. This is September 1st, right? Debit what? What did they do, by the way? They debited cash. How much was it? 8,400.
Okay? And then they credited what? They said right there what they did. What did they do? Credit unearned rent revenue. It's rent, right? What kind of an account is that thing? Everybody, what is it? If you don't know that, you are pretty much screwed. You do this next quiz. It'll be over. What is unearned rent revenue? What's rent revenue? Revenue. What's unearned rent revenue? Would you say? It's a liability. Of course it's a liability. What do you owe people? They paid you for rent of a building or something, right? Equipment or something, and you have not delivered it yet. What do you owe them? Use of the building or rent. Do they have to pay you again? No. What if they don't pay, if you don't let them use it? They'll expect their money back. Now, you're not going to give them money back, so it's not a payable, right? You're going to let them use the property. Would you agree you have a liability if somebody has paid you to use your property and you haven't let them use it yet? Duh. That's all it is. So how come all you guys just sat there and looked at me when I said, what kind of an account is that? Of course it's a liability, right? It's unearned. Start thinking. Start thinking. You are not going to remember this stuff. You're going to figure it out. How many times have I said that? You're not going to remember anything you get in college. You're going to know enough to figure it out. Know enough to go where to look it up. But people always say, I don't need to learn anything in history because I can always look it up. You won't know what to look up if you don't know anything. But yes, you're going to go look it up. I'm not going to remember what dates things happened. 1492. 14. Yeah, thank you. Okay, good. Good. I remember that one. Yay. Got it. But I know about time periods when things happen, and, you know, things that would be useful for you as a human being to know. And I thought you knew a lot more history. Anybody have Bob Pot for history class? No, nobody has Bob. Welliver, you had him?
Yeah.
He's fun, isn't he? Yeah. I got to go to. Pot's not in this class. If you want his grandkid or something, are you Pot? You're his grandkid. Yeah. Yeah, he's Pot's grandkid. Anyway, he's a great guy. I got to go to Madrid with him, and I think I went to Paris with him too. Pretty sure we did both. We're both old. We can't remember what we did. Yeah, he's a great guy. Yeah. He's even older than me, and he's still amazing guy. He must not love his grandkids. He'd rather teach than spend time with them. Yeah, that's it. Yeah, okay. And he was probably buying him gifts and stuff. Yeah, while he's here, his wife is grandma, right? Okay. All right. So what do we got, guys? We have unearned revenue of $8,400. Now let's skip forward to December 31st. Let's look at this one right away. Okay. What do we need to know on December 31st? What happens between September 1st and December 31st? What happens? People paid you in advance. They moved into the building. They used it. And as they use the building, what happens?
Liability went away?
The liability goes away. Absolutely. What else happens? Why do I rent people buildings? That's how I generate my wealth, make money, right? And money not to be cash. Well, it is going to be cash eventually, we hope. But not cash necessarily, but generate what? More wealth, more equity. What are you going to call this stuff? When the unearned rent revenue ceases to be unearned, it is cleverly what now? How about earned? What are you going to call that? Well, rent revenue. Rent revenue. Sales would be if I'm selling a book or a chair or, a product like that. Okay, if my product is a service, right? Instead of inventory item, I call it service revenue of some kind. This we call cleverly for rent revenue. Okay, come on, you guys. So what do you want to do? You think some of the liability goes away? I agree. What do you do to a liability if it goes away? Debited or credited? Debited. That's how you reduce them. You guys know that. Okay? Rent revenue is going to get a debit. And what's going to get a credit? Come on, rent revenue. Okay? Don't be so passive, you guys. What's really awful is after you flunk your quizzes, you will come to a review session, you'll all be on the edge of your seat trying to learn this stuff. That's a really dumb strategy. I know I'm not supposed to say dumb, right? But it is. It's not a good strategy, is it? Wouldn't it make more sense to be on the edge of your seat now learning this stuff so that you can nail the quiz so you don't need to go to the review session? Would that be a better use of your time? Or you could maybe go to the review session and turn your B into an A. Instead of going to a review session to turn your D into a C. Your choice. Show up every day ready to go. You guys did not today, collectively. A couple people did. A couple of people have answered questions. I can pick them out right now. If I were hiring people that's sitting in this group, I'd know which ones I want to interview. If this is my only contact with you ever, I'd know. You guys going to the Accounting Association events, the Finance and Econ Association events, whatever they call them, club? Are you meeting everybody? Are you sitting there, you know them and they know you? Are you doing it? They're meeting right now, right? Accounting Association, recruiting season's on. You need to be there, right? In their face, knowing them, right? Meeting them. How many of you guys are going to work for a company in your life? Probably most of you. They're coming here to find you right now. Go. Say hi. What if somebody invites you to a party and you don't go? Do they keep inviting you? Maybe a couple times. Then what do? You're not interested. I'm GE and I invite you to come and talk to me about doing an internship with me and you don't bother to show up. They have interns from every single major we have. Yeah. You don't have to. It's okay. Steve K graduated from here. He's a great guy. Stupid little kid came in here, worked for my wife. She was the MBA director at the time. He was working for minimum wage in their work study. By the end of the year, he was working for GE for $10 an hour or 12. Now he's on his way to the executive suite. He's one of the highest paid people in GE here in Louisville. He's in his 30s. I like going and having a burden with him, you know why? I can have anything I want. He doesn't care. It's probably expensive. He was. Okay, anyway. So what do we do here? How much is the only other question, right? How much? How much do we use up? How much do we earn? All of it? What period of time was that rent for? Was it 6 months? Oh, so you want to do something different? This is 6 months rent. So you think you've earned the whole 8,400 if it's 6 months rent? How much time went by? Be careful. It's not September 30th. It's September 1st, right? We got to count. All right, fingers. More than 10 under trouble. What do you think? September, October, November, December, 4 months. 4 months out of how many? 6. So what would you do? How about 8,400 times what? 4/6? How much is that? Is that the amount you've earned? Or is that the amount that you have not earned? You can calculate either one, right? What I've got is unearned rent revenue and rent revenue. There's two accounts. Unearned rent revenue is what kind of an account? Liability goes on the balance sheet. Rent revenue is what kind of account? Revenue goes on the Income statement. Come on, you guys. Okay, this is stuff you already know. I'm not going to pretend you don't know stuff you don't know. If you don't know it yet, well, we're doing this class again next semester. I'm not even kidding. You don't have to drop the day. You can wait until you flunk the quiz and pass. Okay? If you don't know this by now, these should be automatic. You got these answers. And by the way, you don't have to answer me, but you better be answering in your head. You don't have to say anything. I'm assuming everybody knows it. If you don't, you're in trouble. Okay? All right. That's a liability. That's a revenue account. Absolutely. We know what financial statements they go on. So how much, you thought it's debit unearned rent revenue. That's excellent because we're reducing the liability. All we got to know is how much we reduced it by. So you tell me, what do we put into unearned rent revenue? $8,400. What do you think it should be now? That's what an adjusting journal entry is. It adjusts it from where it is to where it should be. That's it. What do you want it to be at the end of the year? Okay? And this was September 1st. We're now December 31st. Big deal. We'll adjust. What's rent revenue, at least relative to this particular rental contract? It's zero right now because we didn't put anything in there, right, guys? Okay? So what do you think that should be? By the way, why do I think that should be a credit? Because it's revenue and I'm earning it, right? Why is the liability a credit? Because it's a liability. They're on the right-hand side of the accounting equation. Increase with the credits, reduce with debits, normal balance with the credit, right? That's how we work, okay? How it works. So how much got earned? 4 months out of 6, how much is that? 5,600. So I think that 5,600 has been earned. So what account do I want to be 5,600? Net revenue. Well, how much was not earned then? I guess that's, if we earned 2/3 of it, we didn't earn 1/3. What's 1/3 of 8,400? The rest. How much is that? 2,800? Right? Is there anybody in the room that can't tell me what the journal entry is now? Okay, this is the adjusting journal entry that we're doing here, right? What do you have to do, of course? I bet I have to increase rent revenue by how much? 5,600. Ta-da. What do I want to do to unearned rent revenue, seeing as I earned 5,600 of it? Yeah, that's all you do. Do not try to memorize this. We just figured it out, didn't we? There's no need to memorize it. What for? There are millions of combinations. Okay? Could be anything. Everybody see that? Not a big deal? Okay, I'm going to change the world language. Let yourself think. What if instead of recording this to a liability, see they recorded it to a liability, what if instead they went ahead and recorded it to the revenue account? So let's change our world a little bit. What if they recorded it to a revenue account? What would you do then? What would you do then, you guys? Yeah, how would you record it? Okay, so this time here, right, we've gone to a liability account, right? Let's instead go to a revenue account. Tell me what the journal entry would have been on September 1st, because all I'll say on a quiz is, they went to a revenue account, or they went to a liability account, or maybe what I'd say, they went to a nominal or temporary account. What kind of an account is nominal or temporary? You just read about it. What is that? That's a revenue expense account. It's an income statement account. They're nominal or temporary. We keep track of it for 1 year, and then we close it to make it zero, and we close it to where? Where does the net income go? Net income is added to retained earnings, or net loss is deducted from retained earnings. All right, guys? When we close it, that's what we do. Okay? So they're nominal or temporary. Guess what we call the balance sheet accounts, like a liability or an asset or an equity account? We call it permanent, because we never close them. Or real. So if I use the term real or permanent, would you know it's a balance sheet account? Yes, you would now. Okay, you should when you're read. Okay, it's in there. Got to get so you read. And pay attention to what you're reading. What if you got it when you read and then I repeat it? Oh wow, that's great. You can really learn it now. What if you didn't notice it when you read it? This is the first time you ever heard of it after you read it. What? Why are you doing that? Take productive use of your time, okay? Don't read things over and over and over. Get annoyed with me when I tell you something you already know. That's nice. I like that. Okay? That's a good thing. Okay? You can if you want. You can even complain to me about it. Please stop telling me stuff I know. Let's do something else. If everybody in the room does that, well, I know a lot of stuff we could do. We just keep going, right? Wouldn't that be cool? We can do advanced accounting. Want to? 400 level class right now. If you knew everything else, why not? Okay? So let's get there. Okay? All right, anyway, so what would you do if it's a revenue account? Or temporary or nominal account? Debit what on September 1st? No. Debit revenue? What, are you reducing it?
Credit.
I credit revenue, okay? I credit rent revenue. By the way, I'm not being critical when you say something, you get it wrong. I think it's great you said something. Shows courage. Doesn't show you know anything, maybe you get it wrong. That's funny. No. Okay. Anyway, debit what? Cash. Sure, it was cash. Of course it's cash. Okay, we debit cash and credit rent revenue. If that's what we did at September 1st, what would we do at December 31st, everybody? Well, now we look at where we are, we figured out where we want to be, right? By the way, is one of these right and one wrong? Is crediting unearned rent revenue correct and crediting rent revenue wrong, or vice versa? No, doesn't make any difference which one you do. What matters is what you have on the balance sheet and the income statement at the end of the accounting period. That's all you give people, right? You're not giving these journal entries. I don't care what the balance is in the account unless I'm doing a financial statement. And when I balance sheet and income statement. When I do the financial statement, I want it to be the right number. Does that make sense? Of course, because I'm going to tell people what's going on. Got it? Okay. So what would they have to do? Let's see. What do we have? What's in unearned rent revenue this time? Related to this particular agreement, right? This particular rental contract. How much is in unearned rent revenue this time? Yeah, seeing as we put nothing in it, it's zero. Don't think about it too much. That's true. Okay, that's right. And what we want to know is what should it be at December 31st? Am I right? Okay. What's in the rent revenue account? Oh, that's different this time, isn't it? Because you put the 8,400 in there, didn't you? So it's 8,400. And remember, that's at September 1st, right? What do you need to know? What the balance needs to be when? December 31st. Good. So what do? Figure out how much of it you earned and how much you didn't. Do you guys know how much of it you earned? We already did that in the last part of the problem, right? How much have you not earned? So what account do you want to be 2,800? The one you haven't earned, which is unearned rent revenue. The liability is still 2,800. It doesn't matter how you record it in the first place. It's 2,800 at the end, isn't it? Absolutely. Okay? What do you think rent revenue should be, seeing as you've earned four of the 6 months? It should only be 5,600. This time, though, what's the adjusting journal entry at December 31st? What are you going to debit, everybody? Rent revenue. How much? I think it's 2,800. To get where I want to be. All I'm doing with an adjusting entry is adjusting from where I'm at to where I want to be. And this gets really easy. So I'm going to debit rent revenue, reducing it by 2,800 because I haven't earned that yet, right? I only want to put on my income statement 5,600 because that's what I've earned. Okay, what do you want to credit for 2,800, everybody? Unearned rent revenue. Why would you want to do that? Because you haven't earned it yet. And where do you want to put the portion you have not earned? Unearned rent revenue is a what? Liability. I'm going to put it on my balance sheet as a liability. Boom, I'm done. Got it? This is easy or what? Nothing to it. Okay, well, wish we could even a bigger screen or something, but we don't. Now what did I do? Uh-oh. All right. Whoa, got big now. All right. Okay. So let's do another one. No big deal. B, on October 1st, they borrowed $18,000 from a local bank and signed a 12% note for that amount. The principal and interest are payable on the maturity date, September 30th, 2015. How long are they borrowing the money for? One year. It's 12% interest. Is that 12% a month? quarter, that'd be 3 months, or a year. Let's hope it's not 12% per month. That's really illegal. 12 times 12, what's that, 144% a year? You go to jail. Loan sharks get that kind of money, right? It's illegal. Yeah, you can't charge people 144% interest. So when they say the interest rate, what do they mean? Per year. You just learned some business terminology, guys, right? Business practice. When we say the interest rate, we mean per year. Unless they say what? What if they said it was 1% per month? What would you know? It's 1% per month, right? If they don't say it's per month or per quarter or whatever, what is it going to be? Per year. Everybody knows that now, right? So that's 12% per year, okay? Every day that goes by, what happens? We have interest what? We're going to accrue interest. Yes, we have interest what? We're going to have interest expense because we borrow the money, we use the money to buy assets maybe, and we're generating revenue with those assets, and one of the costs of generating that revenue is what? The interest on the debt. It's going to be an expense, and we're going to accrue it because we're not paying it. Right? Yeah. We record it paid when it's paid. Okay. Oh, by the way, that first transaction we did, deferral or accrual, we should have said that. Unearned revenue. When they recorded unearned revenue, what did they do? The way they did. They recorded unearned revenue. What was it? Accrual. That accrual? Debit, cash, credit liability? That's deferral. It's deferral of revenue until later. It's hard to get used to that. Because we want to be the cash that we deferred or something, right? And then be a deferral. Okay, or the cash we create. It's not the cash, right? It's the revenue or expense. So we put off recording the revenue until later by crediting unearned revenue. That's a deferral transaction. Deferral of revenue. This one's going to be an accrual for the interest, huh? Because we're not going to pay the interest, but we're going to record the expense because every day that goes by, we owe more, don't we? We have more interest expense and more interest payable every day. We don't make a journal entry every day. Why not? What for? I only do journal entries when I'm going to do a what? When do I care what the balances are in the accounts? When you do a financial statement, balance sheet, income statement. So what if you only do them manually? You make adjusting entries once a year. Nobody does that, right? But if you only do them quarterly, well, it'd be 4 times a year. Most companies do it when? At least once a month, right? Pretty much once a month. So we make journal entries once a month, all the accrual and deferral journal entries, okay? We even call it that, all right? So what we got to do here, though, is record the debt, of course. We should already know how to do that. That should review what we already did. October 1st, they borrowed $18,000, and they signed a note. That tells you it's a note, of course. So what do you want to debit? On October, what was it, October 1st or 31st? First. Okay, so this is going to be for what? October, November, December? We already know that one. 3 months. Okay? Not 12 months, 3 months. Okay? So what do you want to do on October 1st? Debit what? Cash. How much? This is getting better. You guys are waking up. Credit what? Now, you really want to know how to do this because you're going to do it real soon. When is the quiz? I don't know, next week sometime? Yeah. We're going to do this. I'm going to give you something just like this. Only more of them, right? And they won't look like that. They'll be the same thing. Okay. Well, they will kind of like that. Debit, cash, credit, notes payable. Okay. So what happens then by December 31st when we're doing a financial statement? How many months went by? Okay. How much interest will you have incurred, right? You guys said it was going to be interest what? Expense. Is that a debit or credit, of course? It's a debit because it's an expense. See how bad you want to know that, right? And credit what? I'm not going to pay it. I'm going to pay it later. So I owe it. It's not more notes payable, but that's not a bad idea. This is only the interest. You don't add it to the note. What do you do?
Interest payable?
Yeah. And by the way, you could have contracts where you did add it to the note and pay interest on the interest. We're assuming they don't. Okay? Interest payable. That's not a bad intuition. Right? Yeah. How much then? Oh, it is calculated and recorded. Big deal. And this will be an accrual, huh? Accrual of interest. So how do you calculate it, you guys? Yeah, 3%, right? If it's 1% a month, that's nice when it's 12% or 6% or something, right? Okay, 12% is 1% a month. It's 3 months, 3%. Assuming simple interest, not compound. We'll do compound later. That's where you have interest on the interest. Okay, so 18,000 times what? 12% interest if you want, times 3 months over 12 months, or just 3%, of course, right? Okay, so let's say the interest rate was 7.5%. I'd probably take 7.5% times the 18, divide it by 12, and take it times 3. Got it? Do something like that. It's common sense. How much is that? What's 1%? 180 bucks?
I believe 540.
How much is it?
540.
540, fantastic. I bet I owe them another 540, so what do you want to do? And I incurred that cost, right, of borrowing the money, using the money to generate revenues. This is a what? Expense. Named cleverly, because it's interest, I'm going to cleverly name it interest. And I owe it to them, so I'm going to cleverly name the liability interest payable, right? Not rocket science. How much?
540.
540. We got it. Okay, I have to make everything harder. So, what are you going to do next September 30th? This is the first year, year A maybe. This is the second year, year B. You got the idea? Tell me what you do. And we're only doing annual financial statements, so we did not accrue any more interest. That's all we've accrued, right? Write the journal. What is it? Devil, what?
Is this 1 year later?
Yes, it's 1 year from October 1st to September 30th. Looks like 1 year. She was doing too well today. Yeah, it's 1 year later. October 1st to September 30th. End of the year. It's due, isn't it? Right? 1 year note. What are you going to do on the date that it's due? You're going to have to pay off the note when it's due, you know, and keep your word, which is a real good idea in business because otherwise people won't loan you money anymore. Good idea in your personal life too, you guys. When you borrow money, pay it back when you said you would. Is there anything wrong with you guys having a credit card? Of course not. Why is it dumb for you to get a credit card? Because you're not making any money, so you can't pay the bills, so you will destroy your credit if you use it. So why would you have one? Beats me. I hope the young women are all carrying around their father's credit card, their mother's credit card, so that their car breaks down, they have a credit card to get it fixed. The guys, we don't care. Made my son so angry. They just come out with cell phones. They're really huge things, you know, and you carry them around your car and stuff. And my wife got one for her and my daughter, and I didn't want to spend the money on one for my son. What the hell? He was a senior in high school or something. He didn't need one. I said, you can't walk into a house and borrow their phone and call for help? What do you need a phone for? They were really expensive then, too. Right? I didn't think my wife needed one either. What the heck? She could take care of herself. My little girl needed one, though, right? Chauvinist, sexist society, it's terrible. He's still mad about that. Okay, anyway, yeah. So, true though. So what do you think would happen? You want to pay it with what?
Cash.
You want to credit it? I do. What are you paying off?
Notes payable.
Oh, I bet that's a liability. You don't have it anymore. What else are you paying off? How about the interest payable? No kidding. Oh, but there's going to be more. Well, let's figure out how much cash. Well, first, how much note are you paying off if you pay off the whole thing? $18,000. You could do this, couldn't you? Huh? How much interest payable are you going to pay off, seeing if you only accrued $540? How about $540? Now let's figure out how much cash we're giving them. What's it going to be, everybody?
18,540.
No, it's not. Come on.
6,480.
I want to borrow money from you. $18,000. I get to use it for a year. 12% interest, and you think I only go $18,540? You don't really believe that, do you? I think 540 is only a quarter of the interest, don't you? It's only 3 months. What's the interest really, guys? It's 18,000 times what for a whole year? 12%. Yeah, that's a little more than 540. 4 times that, isn't it? How much is that? 2160.
20,106.
Oh, it's the whole amount.
Yeah.
Okay, no, that's all right. So how much was the interest? Just the interest. 12% of 18. 2060. 2160. Come on. All right, 2,160. That's the interest for the whole time, right? So how much cash are you going to give them? How about 18,000 plus 2,160? What do you bet? Right? And that you guys told me was 2160, right?
Yeah.
Does that journal entry balance? Of course not. Why not? What about the other 9 months interest? You know, from January 1st to September 30th. What's that going to be? Every day that goes by, there's more what? Interest expense. That's what it is. How much interest expense are you going to have this second year on this note? The first year you had 540. The second year, how much are you going to have, you guys? Well, what is it? 540 times 3, isn't it? 1,620. That's it. That's 9 months interest. Oh. So does this look a lot more complex? It looks more complex, but it's not if you just let yourself think about what happened, right? Okay? I hope your brain hurts every time you see me. Well, not immediately, but you know, after we've been together for an hour, I hope your brain hurts a little. That's good. Right? Okay, can I figure this out? Can I figure this out? Okay? Be thinking. It's easy, isn't it? Kind of. Okay, we'll get into a little bit more difficult things. Depreciation, we love these. Depreciation of 2,500 must be recognized, or should be raised, on a service truck purchased July 1st at a cost of $15,000. Okay, they bought this thing for $15,000. Let's say we just paid cash for it. Yeah, but what? It's a truck, is it? Yeah. I love trucks. I had a Jeep Cherokee once. It's the closest I got to having a truck. I got to use drive trucks though, because my dad had a construction company, so I drove a lot of trucks. But I can't afford a truck. Who can afford a truck? Anybody here have a truck? Pickup truck? You rich kids. They're broken down. Horrible. Somebody bought you a new truck. You bought it yourself?
Most of it.
He's gonna flunk out.
It's not new. It's not even near new. No.
I was gonna say you're gonna flunk out of school making payments. No? Okay. I have to work too much to pay for my truck. Yeah. But now my wife won't let me have one. I need one. It's not like I work. Okay, anyway. What would you debit? How about calling it what? Trucks. Or call it delivery equipment. Whatever the company wants to call it. Don't call it land or building, okay? But trucks, delivery equipment, we can call it trucks. You have more than one, just truck, it's one. How much do we pay for the truck? 15 was it? What if I paid cash? What would you credit? What if I signed a note for it? What would you credit? Notes payable. What if I did a 10% down payment? What would you do? Credit cash for $1,500 and credit notes payable for $13,500, wouldn't you? Nothing to this. You guys already know how to do this. Okay, so that's on the books. What date did they buy it? July 1st. What's their year end? How much time went by? 6 months. 6. July 1st. Yeah, 6 months. Okay? June 30th and July 1st work exactly the same, right? 6 months. February. Yeah. Okay, that's me too. Okay, anyway, sure. So they told you how much the depreciation is. That's fine. But really what's going on here, you guys, is we record the trucks or whatever the depreciable asset is. Buildings and equipment are the only depreciable assets, okay? We got 15,000 in here. Is that truck ever going to go away? As long as we own it? As long as we're using it? Does the truck itself go away? No. But does its utility value get used up? Yes, absolutely. Okay? So my wife's Volvo with 145,000 miles on it is not the same car as when she bought it new. She knows that. She wants to get rid of it. Get a new one, right? New something, right? Still use it. Okay, but anyway, yeah, it's, you know, it's not worth very much anymore in its market value, but also in utility value it's not, right? You know, it's probably got 50,000 or 100,000 more miles left on it, not the 200 to 250 when it was new, right, guys? Okay, so accumulated depreciation is our first contra account. Contra means opposite or opposing. Okay, in your history class, in my life experience, back in the Nixon era, Nicaragua was controlled by communists, and we were helping the Contras, they were called, to try to get the communists out, the Sandinistas out, and we were giving money to the Contras, and they were fighting. What does Contra mean in Spanish? Against. That's it. Opposite or opposing, right? Against. That's what it means here too. Contra account is opposite of the normal. What was really bad was, you guys know who Ollie North was? Did he actually teach that stuff in history classes? Probably not, because it's too recent and kind of political. What happened with Ollie North was he was a major or something. He wasn't real high up, but he had a lot of power in the White House. What he did was he got money, Congress voted that we could not support the Contras, and they funneled money to them by selling weapons to Iran. I'm not kidding. They sold weapons to Iran, took the money illegally, and then took the money and gave it to the Contras to fight against the Contras. You guys should study history. Really study history. Interesting. Our political history in this country is amazing. Anyway, so yeah, that's what they did anyway. It probably wasn't, it wasn't Nixon, it was Reagan. Reagan. Okay, it probably wasn't Reagan's fault though, president at the time, because his Alzheimer's was so advanced, he probably didn't know what was going on. Most people kind of agree with that. Yeah, probably true. Okay, he probably wasn't really functioning as president. Yeah, a lot of people believe that. I don't know. I didn't know him, so I never met him. Anyway, so accumulated depreciation. What is this? It represents, what kind of balance is it going to have? It's opposite normal. Opposite normal for an asset. What's it going to have?
Credit.
Credit. How are you going to increase it? Credit. How are you going to reduce it? Debit. Right? This is going to represent, this balance of this account is going to represent the portion of the truck that you've used up over time. Okay, so how much did they say they used up of this truck this year? 2,500. I want you to tell me what you think the life of the truck is. Let's assume it's straight line depreciation. That means it's the same amount every year. We're going to have other methods that are called accelerated, where we take more in a year, right? Okay. So this is straight line. Let's say it's straight line. Okay. So I'm doing straight line depreciation, which means the same amount every period. How many? And there's no salvage value. That means I'm going to salvage value is what I'm going to sell for at the end. Residual value or salvage value is what I think I guess what I'm going to sell it for at the end of its life. What I'd like you to do is tell me how long you think the life is. If there's no salvage value is 0, and it's straight line, how many years is it depreciating this for? What do you think? 6. You think it's 6 years? 3. I hear 3 and I hear 6. Oh, what'd you do wrong? You're on the right track, but I think it's 3, too. How long is this? How much time's gone by? This is for 6 months. So 2,500 is 6 months, so what would a year have been for a straight line? 5,000. So if it's a $15,000 asset, how many years is it going to last? 3. They're depreciating for 3 years of a straight line right there. Yeah. So how do we reflect using up something? I am using up an asset. I'm using this asset, this truck, to generate revenues. So we're going to call this depreciating it, recording the fact that it's used up. Okay? What do I want to debit then? What kind of an account? Asset, liability, equity, revenue, or expense? I'm using it up. Generating revenues. It's an expense. I'm going to debit the expense. I'm going to credit the asset because I'm using up the asset, right? So I'm going to debit an expense. What do you want to call the expense? Seeing as it's not truck expense. Depreciation expense, yeah. This is depreciation you read about. Real briefly read about it. Depreciation expense gets debited for the 2,500. Okay? So they gave me their first contra account. Now, do I want to credit trucks? No, the truck's not going away. You guys agree the truck's not going away? It's still there. What do I want to do? I want to reflect in my balance sheet how much of the truck I've used up. How am I going to do that? Accumulated depreciation on trucks, yes. Okay? So yes, but not close. Yeah. Okay? So that's going to be credit accumulated depreciation on trucks. That this 2,500 here is going to be how much of the truck we used up. What am I going to show on my balance sheet? Oh, by the way, crediting that account, increasing a contra asset, reduces your assets in total. Does that make sense? You're increasing the credits. What am I going to show on my balance sheet? I'm going to show trucks for 15,000 less accumulated depreciation of 2,500 for a net book value, remaining truck, of how much? 12,500. Everybody see it? What am I going to do next year, because it's a whole year, at the end of next year? Debit depreciation expense, how much? 5,000. Credit accumulated depreciation, how much? 5,000. If you put another 5 in here, what would you have in here? 7,500. Now what's the remaining book value at the end of the second year? 7,500. What will be the remaining book value after the whole 3 years it's used up? 0. Got it? That's what we're going to do. If there is a salvage value, the remaining book value would be the salvage value, or residual value, what I'm going to sell it for at the end, my estimate of that. Everybody good? Make sense? So you know what? When you look at a balance sheet for a company, you can see how much they paid for all their buildings and equipment. And you can get an idea of how old it is by looking at accumulated depreciation. If accumulated depreciation is almost as big as the equipment, guess what? It's real old. What if the accumulated depreciation is almost nothing compared to how big the equipment is? It's new. Right? Gives you some insight. And then the notes to the financial statements give you additional information about how old things might be. Got the idea, everybody? Wow. Well, we just don't get through anything, do we? We're going through a lot here, you guys. A lot. Do these problems and think about it. Think about it. What happened, what happened, what happened. And then how do I record that? It's not time to leave yet. We'll do one more. Somebody had a question, though? Yes.
Do you look like put it all or balance? Stick all of your accumulated depreciation together?
Oh, his question is, would I put all the accumulated depreciation on all the pieces of the equipment together into one? Yes. And then all the accumulated depreciation for the buildings together into one? Yeah, probably. So I show buildings less accumulated depreciation in total. I get the book value in total, and then I take book value, right? What's in the books, the general ledger's book value, right? Which is also carrying value. Same for the equipment. Add all the equipment together, right? Add all the accumulated depreciation together. You can summarize your financial statements however you want. Very flexible. Show as much detail or as little as you want. You just try to make your balance sheet fit on 1 or 2 pages. Your income statement fit on 1 page. Does that make sense? Okay. By the way, where does the depreciation expense go, everybody? It's expense. Where's it go? On the income statement. It's reducing your income. What happened here? I used up an asset, right? What do I have? With this journal entry. We're always doing this. What do I have, everybody? Debit depreciation expense, more expense. That caused me to have less net income, which caused me to have less what? Equity, retained earnings. What does a credit to accumulated depreciation do? It increases accumulated depreciation, but what's happening to assets? It's going down. Got it? Work a bunch of problems. Work a bunch of problems. All right, don't let anybody know I let you see my time. What? Not very Study. Don't let it rise, you guys. If you didn't have a clue what I was talking about today, man, I'd work. I'd love it if you guys kept this real high GPA or if you had that preferred quiz. I'm not counting on it, but I'd love it.
Oh, can you screen those things on? Oh, hey, on this one.
That one? This one here.
Yeah, that was